Alright guys, welcome back to the channel. Really appreciate you watching these videos, and just to quickly shout out some of the new subscribers to the channel. I really appreciate your support, and I appreciate the fact that you're taking the time to watch these videos and share them around, because it's really important information. So you guys are popping up on the screen here. Welcome to the channel. It's great to have you, and it's great to have you contributing to this channel as well in the comments. So thank you very much. Before we kick on to the video, I just want to say this is probably one of the most important topics. So don't underestimate the importance of what I'm going to be talking about in this particular video. And it's a big kind of debate, or it's a topic that people swerve a lot of, and you'll probably notice about some of my videos, I kind of talk about stuff that most other people don't talk about, and it's all based on working with some of the best in the industry and the results that I've got and the results that I've seen others get, and what I believe is the most important part of trading. And I want to talk about backtesting. So one of the most common questions I get is, do I need to backtest? You know, how long should I backtest? Some people are saying you don't need to. And first of all, I just want to say that anyone that tells you you don't need to backtest a strategy is a different type of human being. They might be okay going into the markets and trading without any kind of historical data, and they might be comfortable doing that. But for the majority, you're not going to be able to do that. And I want to kind of cover some points on why it is so important to do this and how you should go about it, right? So before I get into that, let's just break down what a trading is. A trading strategy, and by the way, a trading strategy just makes up a tiny piece of your trade plan, your overall trade plan. But a trading strategy is essentially an occurrence in the market that happens frequently. Okay, and all of those kind of psychological moves in the market that's driven by human psychology, or even if it's an automated system or some kind of algorithmic trading process, that has still all been developed by human beings. Okay, now with that being said, your job as a trader to create a system is to identify something that happens frequently in the market. Okay. And then your job is to go and build rules around the entry of that thing, and rules around where you put a stop loss and where you take targets, and optimal positions for both, so that you don't, you give yourself enough breathing room to not get stopped out more often than not. And you want to target at an optimal position where it hits that level more often than not, and it hits it as quickly as possible. That is it. That is a trading strategy. Okay, let's not overcomplicate it. Now, with that in mind, your job as a trader is to go and trade that into the markets. Okay, now the only thing that you must understand, particularly if you're new to trading, is we never ever know what's going to happen next at any one given time. So you might see something that happens frequently, and then you go and build some rules around it. No point do you know when that's going to play out, how it's going to play out, how many opportunities you're going to get. We never know what the market is going to do in the next minute, literally, let alone the next week or month or year. Okay, so with that being said, that kind of ties into why psychology is so important and discipline is so important, because not only have you got that strategy, you're now going to fund an account to trade that regular occurrence, right? Not knowing what's going to happen next. So all we need to do as a trader, if we've got a strategy, is prepare mentally to be able to go and trade that live in the unknown markets going forward, right? The black space to the right of your charts. And the only way we can prepare ourselves mentally is by having historic data that backs up our trading strategy, right? That is it. So first of all, if you've got a regular occurrence happening and you've built some rules around it, the only way that you're going to have the mental kind of gall to sit in those trades day in, day out is if you've gone and tested that strategy and you've got some confirmation that actually in the past, this has yielded some returns, some good returns. Right? So that's point one. Point two is it gives you quite a high degree of certainty of what's likely to happen over the next 6 months or next year with that strategy. Without the backtested data, you haven't got a clue, right? You don't know the win percentage. You don't know the maximum drawdown period. You don't know the maximum loss in terms of actual money, right? In pips or monetary value. You don't know how long the recovery period is from your, the dip of your average drawdown to the previous high in your equity curve. You don't know any of that stuff. Whereas if you test it, at least you've got the belief that that's what's likely to happen. You know the probable outcome, and trading is just a game of probabilities, okay? And then having the discipline to play those probabilities. So with testing a system, you do know the probabilities, right? So that's point 2. Point 3 is it gives you that psychological and mental strength to go out there in the markets day in, day out. And when you hit a drawdown, you can look at your tested results and say, is this normal? Yeah, right, I've had 5 losing trades in a row. Last year, I had 7 losing trades in a row. In fact, every August or July or April, whatever it is, I've been in a drawdown for most of that month. This is perfectly normal. Or I'm, 4% down in my drawdown. Well, actually, my maximum drawdown over a 10-year period was only 8%. So I'm not near the 8% yet. I don't have to worry. I need to just continue to trade the plan. So it gives you the psychological strength to maintain your consistency and your discipline in your trading. It gives you the discipline to do that. Point 4 is it's all we have. It's literally all we have. It's all we have to go on. Unless you've got a crystal ball or a genie and a lamp, that is all you have to go on, and that's all any trader has to go on. The historical information of how that strategy has performed in the past. That is it. The next point is it trains your eyes. So as you're going to test that strategy, you're going to see that pattern very, very easily. It's going to pop out to you and you're going to identify it even easier when you're going live into the market. You'll also pick up some nuances and you'll build some discretion. You'll identify certain things that happen whilst testing that strategy. You'll notice that there's lower probability setups and higher probability setups, which you just won't have a clue if you don't do that. The next point is, if you're doing all that testing, you're actually treating trading like a business. You're doing your market research. You're going out there and you're understanding the bones of your business. You've got black and white data to know how your business profits and how your business will perform going forward. And if you're treating it like a business, you're treating it, you're probably 95% ahead of most people that try their hand at trading. Another point, which is a really important one, is you don't suffer the death by 1,000 cuts, right? So most people just go out and trade blind and they don't see all of the pairs that aren't profitable, or they'll see a regular occurrence, but because they haven't tested, they don't know that a certain month or a certain day or a certain time of day or a certain market isn't profitable on that particular strategy. You might have 2, 3, 4, 5 winning pairs, and they produce a positive expectancy, and but you might have 1, 2 pairs that are bleeding your profits dry, and it's like that member of staff that's stealing from the till, right? You don't know, you don't see it, a pound here, a pound there, $5 here, $5 there, but over time you're wondering, why isn't this profitable? And then because you're just trading it blind on a system that's bleeding you dry, and it's death by 1,000 cuts. The next good point about testing is that you're going to get into the habit of looking at data, journaling data, and those who don't journal their trades are literally going to go round in circles forever and ever and ever, because the journaling actually becomes your new backtested data. So whether you backtest at the start or not, you have to backtest to maintain your edge. So if you don't want to backtest at the beginning, why are you going to backtest your journaled data? You're probably not. And if you don't, that means your edge is deteriorating constantly. You don't know how to optimize or tweak. You end up at this point where you might have a 6 month, a year, 3 years of a winning system. Then you get to the point where it don't work anymore. And guess what? You haven't taken any notes. So now you've got to go back to scratch and learn a whole new system. And you don't know what went wrong because you haven't got into the habit of journaling your trades, which is your new tested data. The next point, which is a real popular one, is investment. If you are a retail trader and you're looking to get investment from investors, I'm an investor myself, and I'm a pretty high-risk investor. I consider myself a high-risk investor because that's the way I've very carefully structured my investment portfolio that way so that I can take high-risk investments. Now, even me, if you are coming to me and I come in a boardroom table and you're pitching an investment to me and you want £250,000, £500,000 of my money, before I give that to you, I'm going to ask you, where's the risk? What's the risk? What security do I have? What's my maximum drawdown? How much am I likely to lose at any one point and we're going to be in the red so that I can see if I can handle that? When is how long does the maximum drawdown last? What's the biggest losing trade? When am I likely to get a return? How much is my return likely to be? What's the performance? You won't know any of that if you just go, well, I'm a bit of a discretionary trader, so you'll just have to trust me. I'm going to laugh you out of the room, and so will many of the investors that I know. I don't know anyone that will give you money if you don't have the data that shows me that you're treating it like a business. Forget it. And then look, the last point is, and this is a question I've got for you, which I'd love you to answer in the comments, is why wouldn't you? Why wouldn't you? Trading is the only business that you can start on day one with a live account and have a profitable business without having spent any money. Yes, you may have spent a little bit on a data feed or a platform and a PC maybe, but you can open your doors on day one and have a profitable system out the get-go. I don't know many businesses that you can do that. You normally have to go and do loads of research and then open the thing and then try different marketing tactics and posters and flyers and coffee shop, and you might bring people into your coffee shop and you got to hope that they come through your door, and then there might be a recession, you have to shut down, lock down your doors and all this kind of thing. It's completely unknown. Whereas with trading, if you've tested all of your data, you've got a solid system and you've treated it as a business, so you can go out there now and produce a profit from day one without spending a penny or risking a penny. And on that day one, you've got absolute certainty of the probabilities of your system. That's an incredible business. So think about it this way. The way I look at testing is this. Imagine if you've just woken up on this fishing boat, right? Like Jason Bourne in the films, and you're unconscious and you don't remember what happened, how you got there, and you're on this fishing boat. And you've got no idea where you are, and you're trying to figure it out, right? So someone tells you that we're heading west, right? So you think, well, okay, well, where's east? And they say England. And you think, well, okay, well, we're heading west, so we must be going to America, right? You still don't know where in America you're going because you've got no idea where you are. So just by asking the question, where's west, where's east, you're starting to test the probabilities of where you're likely to end up. Then you might say, well, what are the coordinates? What coordinates are we going in? And they say, well, we're 10 degrees right. And you're going, right, okay, well, what's 10 degrees left? And they say, well, that's California. Okay, well, 10 degrees right must be Florida. And you can start to piece together and refine your system so that you know. And then trading is this continuous journey of getting data from the markets, tweaking it, testing it so that you can pinpoint exactly the probability of your system and where you're likely to end up. And that is a continuous journey. So if you haven't tested at the start, that means you're not testing now, you're not journaling your trades, you've got no chance. You're going to end up very, very frustrated. You're going to go round in circles. So look, let me know why you wouldn't backtest. I'm interested in your answers. That's it for the video lesson. Hopefully you got value. And if someone needs to hear this that you know, or you had this argument with someone about testing or not testing, please share them this video and let me know what they say. Let me know what you think in the comments, and stay tuned, and I'll see you in the next video. Take care.